Education and recruitment group Advtech released its interim results today, reporting revenue up 13%, bolstered by acquisitions and a 15% rise in trading operating profit. And while normalised earnings grew, overall earnings per share did come under pressure, falling back 10%. Still, Advtech has declared a 15-cent dividend, holding it steady as it foresees its expansion plans requiring significant funding over the next few years. Roy Douglas, CEO of Advtech, joins us on the line now to put all of those numbers into perspective. Thanks so much, Roy, for joining us today. So as we highlighted there, quite positive numbers coming through, but that not entirely translating all the way through to the bottom line. So give us a sense of the real growth you're seeing in the current environment, because a lot of your positive earnings seemingly bolstered by acquisitions over the period.
Well, actually, a combination of both acquisitions and also organic growth. It does depend on the sectors that you're looking at. Certainly, in our schools business, revenue grew some 18%, and that was predominantly on the back of a number of acquisitions that we've made over the most recent period. So the schools division continuing to gain market share, grow our critical mass in key positions. Although the profit position there was a little disappointing at 5%, that's because of a lot of upfront incurred costs, and some of the acquisitions that we've made are not yet delivering at full capacity, but they will in due course come on board, and then obviously that profit position will improve. But the tertiary division actually was largely organic growth at around about 12% revenue increase. And the real positive element of that was the leverage, the operating leverage that we gained, and profit grew 24% off the back of that 12% revenue growth. So a combination, good acquisitions in the schools business, bolstering our revenue at the top line there, the benefit of which we will see in future periods. Great organic growth in our tertiary business, which is translated into good profit results.
Okay, so that distinction noted then, Roy, let's talk about your schools division first of all, because organic growth at those upmarket schools being hampered on the one end by immigration, and then on the other hand, financially constrained parents. So just how hard are your enrollment numbers being hit?
Yeah, it certainly is a feature of the last couple of reporting periods that we've had. There have always been an element of parents who, through a variety of circumstances, find it difficult to meet the fee structures. But of course, in the last couple of periods, I think the accumulation of really poor economic performance has taken its toll on consumers, and we've certainly seen a significant escalation in exclusions due to financial reasons. Overall, our gross level of enrollments were actually quite satisfactory at the beginning of this year. What impacted us were the number of exclusions for, as I say, financial difficulty, and also, of course, that element of immigration, which has continued. Disappointingly, we had hoped that that might be a one-off or a rather limited impact on our business, but we still see quite a high level of impact from immigration out of our system.
To an extent, Roy, that's what your mid-fee sector now starts to speak to, where you're starting to see good growth there. But how much of that strategy hinging on your ability to drive operational efficiencies and sharpen your market focus?
Yeah, indeed. We have a range of plans to drive efficiencies, improve effectiveness, and sharpen our market focus. We are actually at Advtech historically an organization that has grown quite substantially through acquisitions, incorporations, and of other brands. And what that left us with is a legacy of organizational structure and information systems, which was difficult to optimize. So in the last recent periods, we've really been working hard at reorganizing our business along our brand portfolio lines, making sure that the brand teams are very sharply focused on their particular market segment. That's allowed us also rationalizations of transaction processing across the back office, which we've had to do. We've obviously had to change information systems in order to be able to facilitate that. So a great deal of work has been going into the schools division, reorganization, restructuring, making the organization more efficient, more focused on its particular areas of expertise, and that has required an investment in new systems to support those reorganizations.
Roy, while that happens, you've still got your expansion plans afoot. I mean, just how targeted an expansion strategy are we looking at here? Because one assumes that, it has to mitigate against the risk of sitting with idle capacity as well.
Yeah, quite right. It is difficult, and we need to evaluate projects on the basis of where are we likely to get satisfactory returns when there are perhaps some due defects in the market. I think at the end of the day, there are, of course, sweet spots, nodes where there is good growth, and it's important to be able to identify those and make sure that we're fulfilling the opportunities in those areas. We need to make sure that whatever target acquisitions there are align with our brand portfolio as well. So we have to evaluate each of those opportunities as to how it will integrate into our portfolio. And geographic location. We have been...
and that's what I was getting to. Does it see you focus your attention more outside of South Africa's borders, because that's where you have been pretty busy?
Well, we certainly have been, and we do see opportunity outside of South Africa because the demographics are very similar. Young, emerging markets, urbanization, and a thirst for education. So those demographics are very similar in the rest of Africa as they are here. It's not to say that we don't see opportunity in South Africa, but we certainly believe that there are good opportunities in our neighbouring geographies, and that's certainly been a focus of ours, and we're very pleased with some of the progress we've made there.
Well, let's leave it there. Roy, thanks so much for having joined us on the line this evening. That, of course, Roy Douglas, CEO of Advtech.